Hello guys, good afternoon. My name is Tomasz Wiśniewski and I'm a Chief Analyst in Alpari Research and Analysis, and welcome to daily analytical report with Alpari. This will be very important week because we do have FOMC meeting on Wednesday. Now the volatility is rather low. We had an upswing yesterday on euro-dollar. Two reasons. First one is technical, that we're defending very important support, which I will show you later. And the second one is that many traders are anticipating that Fed will tell that American dollar is actually too strong right now and it can hurt some of the companies, some of the American companies, which will be a pretty dovish statement. That is why many traders are closing their long positions on American dollar. Also, we do have this OPEC agreement from the weekend, where non-OPEC countries also declared cut in the production. Russia, Mexico, Azerbaijan and other countries. This helped oil vastly. We opened with a bullish gap on Monday. We had a bit of retracement, but now the price is advancing higher again. So higher prices of commodities, because it's not only oil but other commodities as well. It's influenced by the weaker dollar. Higher prices of the commodities are helping commodity currencies worldwide. So for example, New Zealand dollar, Australian dollar are gaining strength. Also Canadian dollar with a very interesting technical pattern, which I will show you in a second. But let's take a look on the charts right now. First, obviously, as always, we have to start with the economic calendar. As always, you need to know what's going on, what's happening on the markets. So as you can see, today we had a pack of data from Great Britain. We had CPI, which came better than expected. PPI came slightly worse, but not a big difference. Also, in an hour and a half, we will have a data from housing market in United States. On Wednesday, as I said, FOMC statement, FOMC economic projections, also interest rate decision, depending from the tool, depending from the instrument, but rate hike is more or less certain. There is 95-100% probability that this will happen. So it is expected that we will have a rise in interest rates in United States. On Thursday, also an important day for British pound, we will have two interest rates decision. We will have a Switzerland, Bank of England, and on Friday CPI from Eurozone. So that would be it from the fundamental point of view. As we said, we have a bit of a correction on American dollar, and we do have an anticipation of FOMC. So now we can start with the charts. First I will show DAX and WTI oil. So DAX, as you can see, is advancing higher. We had this flag in the second half of November. Flag was bullish. So from this flag we could anticipate that the price from this point will go higher, but actually what happened, we had a bearish breakout here, which questioned that flag, but as we can see, it happened to be a false breakout. This was a false breakout, and you know, because I'm telling about that almost on every meeting, that bearish breakout, well, false breakout, it doesn't matter if it's bearish or bullish. False breakout is a great opportunity for a movement in the opposite direction. So once false breakout is estimated, and you can clearly see it, and you could clearly see it somewhere here after this candlestick close, it was clear that it was a false breakout, and from the price action point of view, it gives you a strong signal in the opposite direction, and that's what's happening. Prices advancing higher on DAX, and actually today we made new intraday high, as you can see here. Also, what is very interesting, that was a head and shoulder formation, but again, that's what we are telling all the time. You just don't go for a head and shoulder formation itself. You wait for a breakout of a neckline, which actually didn't happen here. So head and shoulder formation is just a chance. Here it wasn't activated, because for this formation to be activated, we should see the price below the red line. The price closed below the red line. This didn't happen, and the price advanced higher. WTI oil, as you can see, we had a bullish gap on Monday after this news from OPEC and non-OPEC countries, and non-OPEC countries. We had a bit of correction. It's happening very often that when you have a gap, the price is trying to close this gap. It's very technical movement. They didn't manage to close this gap. They went just to touch this those highs from the beginning of December, but that was it. And now they are advancing higher. So this gap is still not closed, which increases the chances for a bearish movement in the next few days, because this gap is still not closed, and it's supposed to be closed. I would say that, I don't know, 80-90% of the gaps are sooner or later closed. But despite that, we do have a bullish trend on oil, driven by the positive information from OPEC agreement. But also we have some negative information, like, for example, oil production in United States. United States is predicted to rise the production, right? Because the higher prices. That's what we are saying, that higher prices caused by OPEC will attract other producers to increase production and use those higher prices for their benefit. Let me change the account to show you currencies. We start with euro dollar. So I was telling you about this horizontal support, which was very important for a bounce. It's here, 105.20. It was tested 3 times recently. As you can see, yesterday we had a fat test, 1, 2, 3 fat test, and look at this formation, maybe a little bit closer again. What's that? That's bullish engulfing. 2 candlestick formation. When bullish candlestick is happening on the horizontal support, it gives you buy signal. I would even go for it, but not before FOMC on Wednesday. So actually, this is this buy signal here created by a bullish engulfing on an important horizontal support is relevant, but the timing is bad because we are before FOMC meeting and rate decision. So the time for entering the dollar is not the best one in the world. But from the technical point of view, if we wouldn't have this meeting, that would be a nice buy signal here. As I said, commodity currencies are gaining right now, and this is American dollar to Canadian dollar. You know this pair because we are telling you about that for a long time, at least for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days, so 2 weeks of trading. Why is that? Because we had a downtrend, correction. The correction stopped at 50% Fibonacci level and upper line of the flag. Flag is a trend continuation pattern, so what we should see here is a trend continuation. But I was telling you not to go short too early, but wait for the breakout of 38.2 Fibonacci, and it happened. And once it happened, we have a nice decline here. Today is 1, 2, 3, 4, 5, fifth bearish day in a row so far, and we reached the lower line of the flag. Actually, this can be a trigger for a bullish bounce. Also, what I'm interested in is maybe a correction equality. Let me check. I just noticed that those corrections are more or less the same from this top. You have to count, right? So this creates a chance for a bounce here. Why? Because we do have this potential correction equality movement. We do have a lower line of the flag. So actually that is why we highlighted this scenario lately, I think on a trading sniper video, that we can have a bounce from this support, but the overall sentiment should be the price going lower. So the overall sentiment should be bearish here. Why? Because that's how the trend is, and that's what the trend continuation pattern is trying to tell us. But lower line of the flag is a good place for a correction, so we may experience it. So far we do not have correction, so the breakout of the lower line of the flag is very near. Gold on a weekly chart. First we can start with the weekly chart. So what we are having here, actually, well, not the prettiest one, trend reversal pattern, head and shoulder. If you still don't see it, let me highlight it for you. Left shoulder, that's a head, and that's a right shoulder, right? We had a breakout of the neckline, and now the price is declining. This is a weekly chart, so keep in mind it's long-term situation. So we were breaking most of the supports, most of the very important supports, Fibonacci levels, etc., etc. And now you may be wondering, where is the bottom on gold? Because we are falling. Actually, this is a weekly chart. You can see 1, 2, 3, 4, 5. 5 bearish days, bearish weeks in a row. So where is the bottom? We can assume that the bottom is here of the recent movement, around $1,100 per ounce. Why is that? Because we do have a cross of two important trend lines, but also the psychological barrier of $1,100 per barrel. What are those lines? The red line is recent downtrend line connecting recent lower highs, and green is the long-term uptrend line which supports the gold price from 2006, and they both cross in one place. Also remember, when we had this bounce, why we had this bounce at the end of 2016 on this level? Well, we had this before. It was estimated that gold miners, gold mining company, gold producing company will limit production of gold mining gold when the price will fall below $1,050 per ounce, because for them it's like a limit of the production. If the price will go lower, then they will stop or they will reduce the output. And I think that gold mining companies, gold producing companies are more serious than OPEC. OPEC is just telling you that there is an agreement, but maybe there can be no agreement. So actually, after market find out that the lowest price for the gold acceptable by producers is $1,050 per ounce, the price skyrocketed. This is 1,100, 1,050 is not far below that. So this area can be generally considered as support on gold. Let's look at the short-term situation, because it's also very interesting. I deleted that, but that could be a very good lesson for price action traders, because we do have a short-term downtrend, which is stopped by corrections. First one is a flag, second one we can say is also a flag, third one is a flag too. So what are we having is a downtrend, trend continuation, a breakout, trend continuation, breakout, trend continuation. Most recently we also had a trend continuation pattern, like here a flag or a rectangle, it doesn't really matter, and a breakout and a test of the lower line of this formation as a closest resistance, which happens, and it goes on and it goes on. Obviously it cannot go forever, so we can slowly look for a potential place that we can see a breakout here. Let me highlight this trend line a bit better for you. So for example, if the price would come back here, that would be a short-term buy signal for gold. But overall, we shouldn't be surprised if we would go $50, even $50-$60 lower in the next few weeks and maybe months. Euro to Canadian dollar, another instrument that we are telling you about, where we can see a nice sell opportunity. Also on the long-term chart, so the first target is a trend line, and you may think that this is not a good opportunity because it's very close, but remember it's a weekly chart, so it's still 350 pips for you to take from the market, so maybe it will be a nice idea for you. Why is that? Because we do have a head and shoulder formation, left shoulder, head and right shoulder. This is the neckline. Neckline is a horizontal line, which is also a 50% Fibonacci level, so very relevant. This neckline got broken, the price went lower, and now, as it usually happens, the price is testing this neckline as a new resistance. So we shouldn't be surprised about this kind of movement, for example, and a decline here. But also there is another scenario that the price will go down just here. So from this point to potential, for example, for a potential stop loss area, we have 250 pips, and from here a potential movement is even more, 450, not 350 as I told you before. So it's more or less 2 to 1 in terms of risk to reward ratio, which makes this possibility acceptable in terms of money management and risk management on Forex trading. But it's a very interesting occasion to trade, very technical. Also, why there is a target for this formation, because we do have a trend line, but also a potential correction equality movement. So we had this correction and this can be the same. Also, at the same time, we do have a 61.8 Fibonacci level. They all cross in one place, which makes this place a possible support. So when the price is declining and finds a support, it would be nice to take profit from your short orders. Euro to British pound. Here, this creates an opportunity for a bearish breakout. We were defending the support bravely. We spotted that occasion. You could benefit from this idea with over 100 pips. But now the price is advancing lower. Pound is a bit stronger because fears of hard Brexit are vanishing. Now the market is expecting negotiations, deals, agreements, not a hard Brexit itself. So that is why This is the factor which supports British pound. So actually we may see a breakout here, but as far as the price is above this horizontal support, the sentiment here stays positive. Also, British pound to American dollar, we were telling you about this correction equality movements. It helped a little bit because the price declined, but now it's advancing higher. Obviously, we are still in a flag formation, but as soon as the price stays below the upper line of the flag, this one, the sentiment is negative, and those higher prices can be used by sellers to open new short positions with the better prices, but with the price still on high levels, it creates a chance for a bullish breakout as a flag denial here, which would send the price much higher. I don't know if you remember our Brexit webinars. I was telling that reaction, initial reaction on the pound is exaggerated, and I don't believe about the hard Brexit scenario. And in long term, I think that British pound should be much stronger, as the data is showing us, not the headlines from Daily Mail or the Daily Telegraph and other newspapers that are scaring us about the Brexit outcome. Australian dollar to Canadian dollar. Here we do have two commodity currencies together, and we recently defended this horizontal support here, which creates a buying opportunity because we are still in an uptrend. So the price is creating higher highs and higher lows, even with this head and shoulder formation. But I don't like this kind of head and shoulder formations because the neckline is declined. It's better if there is a head and shoulder like that. Let me draw you that for you. When the neckline is inclined, right here. So this is head and shoulder formation, and this way this is a neckline, and neckline is inclined, and those are better formations, not this one. Okay, those tend to work better, more often than this one. And as you can see, we had a breakout so far. It can be considered as a false breakout from this head and shoulder formation. So actually the price may be advancing higher from this point, especially that they met the horizontal support here on 61.8 Fibonacci. Silver is having a much better time than gold, which is very interesting. I recently checked out the gold to silver chart because I spotted that the situation on silver is much better than on gold, and actually on gold to silver chart we are heading to the yearly lows. So in this year, and whole 2016, silver is on it's one of the strongest periods against the gold, which actually can be seen on the chart. And the short term and hourly chart, as you can see, silver is making higher highs and higher lows. And on let me tell you that on hourly chart on gold, gold is making lower highs and lower lows. So it's a typical downtrend, and on silver it's a typical uptrend. So gold in this time is treated as a precious metal, and a safe haven asset, and is strongly influenced by dollar. And silver is treated here more like industrial metal, so it's gaining along with copper and other commodities. That's where the difference comes from. New Zealand dollar to Swiss franc. This is our idea from the Trading Sniper video. This is an ascending triangle. Here we and a daily chart, remember, so it's a long-term opportunity. We do have a horizontal resistance here. The price broke this horizontal resistance, triggering the buy signal. Then we had the retracement. Tested the recent resistance as the closest support. Test was positive, and now the price is advancing higher. So entering with a long position here would be good with a trend, applicable with the trend. Also, we have a nice target here. In terms of risk to reward ratio, we are here, and the support should be a bit lower, like 80 pips lower, and a potential target for this position is 160 pips, which is 2 risk to reward ratio, which makes this position acceptable by the traders. Also remember about the positive positive swaps, because you're buying the currency with higher interest rates, and you're selling Swiss franc, which, as you know, has a negative interest rate. Euro to Australian dollar, also interesting position also according to the swaps, because, as you know, euro negative interest rate, Australian dollar positive interest rate. And what we are having here is an uptrend, higher highs and higher lows. Uptrend ended, well, actually ended here, but from the technical point of view ended when the price broke the trend line. Also, we are making lower highs and lower lows, and after the breakout of this very important support that we are telling you about all the time on 1.444, we had the breakout of this support, and now the price is creating a rectangle. From the price action books, you know that rectangles are trend continuation patterns. So if we do have a new trend, we do have this rectangle, and we should await for a bearish breakout. As you can see, the support is quite clear here. It was tested at the end of October, and at the beginning of November, and at the beginning of December, and is being tested here one more time. On an hourly chart, what do we have here? Is a downtrend, is a beautiful flag, very technical. Let me just connect those lower highs, higher lows and higher highs. And now we are experiencing a breakout here, and the possibility of a downswing here is very, very high. Right? So I wouldn't be surprised if we would meet tomorrow and we would see a nice downswing here, but obviously everything can happen. We should just wait. Australian dollar to American dollar. So I was telling you a few times that that resistance on 38.2 Fibonacci level looked decent, but it was tested for too many times. So many tests indicates that there is a quite nice buying pressure, and that the number of sell orders on this level, they are being depleted. We had a false breakout here, which caused a nice retracement, but then again price went up, tested this level again, which was a positive information for sellers. But again, we had a test on Monday. We had a breakout today, then a decline, which also creates a false breakout opportunity. But as you can see, the price is still advancing higher, so there is a really high buying pressure here, and I think that finally this resistance will be broken, because we had too many tests of this resistance here. So actually it's no longer a resistance. What we can consider as a resistance is this line connecting recent higher highs, which still makes it a wedge, which is a trend continuation pattern. So it's not such a big deal, especially that we will have a horizontal resistance here. But once this resistance will be broken, that will create a buying opportunity here. As long as we stay below Fair enough, there's still midterm sell signal, but we have to be very careful with that. And remember, when trading, you have to choose the best positions available on the market. And I showed you like two of them, for example, New Zealand dollar to Swiss franc or euro to Australian dollar. So if we don't have clear signs here, why struggle opening positions here if you still have a limit number of free slots in your strategy, because you shouldn't open too many positions. So if you have a limit number of positions to be opened, maybe stick with those with the best ones, like American dollar to Canadian dollar, euro to Canadian dollar, also very interesting, and those to New Zealand dollar, Swiss franc, euro to Australian dollar. So from this, I'm very positive that you can find something for you. Guys, thank you very much for attending this daily analytical report. I hope you like what you're watching. Now we'll have a half an hour break, and after that we will have a webinar about basics of Forex trading. Remember to follow us on Twitter and on our website alpari.news, where we publish our analysis from Investing.com, from FX Street, from FX Empire, so from all professional Forex portals on the web. Thank you very much, and see you tomorrow.